Elon Musk reveals that China's economy is collapsing. As Elon reveals, the country is getting worse every day, and a lot of things are happening that people are not aware of. But more importantly, according to Musk, soon a lot of bad things will happen in China because of this collapsing economy, and people should know what is really going on in China. This is a crazy story development, so let's explain how Elon Musk reveals that China's economy is collapsing. So China's population is truly vast, reaching an estimated 1.425 billion people in 2023. That's more than 1 in 7 people on Earth living in China. To put that into perspective, let's imagine the entire world population lined up shoulder to shoulder. Every 7th person you'd encounter would be a resident of China. And China boasts the world's largest population, nearly triple that of the United States with its 330 million, and more than that of India's 1.38 billion. With that as of today, China currently boasts the world's second largest GDP, estimated at around $18 trillion, trailing the US's $25 trillion behemoth. While still significantly smaller, China's economic muscle dwarfs Japan's $4.2 trillion, showcasing a significant gap between the Asian powerhouse and its neighbor. This economic disparity translates to a stark difference in living standards. The US boasts a GDP per capita of nearly $76,000 compared to China's $12,700 and Japan's $33,800, highlighting the challenges China faces in translating its economic might into broader prosperity. Also, last year approximately 52.83 million companies had been registered in China, averaging to almost 24,000 new companies created every day. So, with this impressive number, how is this possible that China's economy is collapsing? Well, for example, Elon Musk has been quite vocal about his concerns regarding the collapsing China's economy and the potential for an upcoming horrible economic crisis. As you know, Musk has a lot of business interest in the country related to Tesla, so economic situation in China is a very important and sensitive topic for Elon. Musk believes that a crisis is very highly likely and has stated this on multiple occasions. And according to Elon, also a very important issue is that China has one of the world's lowest fertility rates, which, combined with its large aging population, poses significant economic and social challenges. The country's decades-long one-child policy, which ended in 2015, has contributed to this demographic imbalance. So according to Musk, China's economy is performing horrible recently, and there are few different problems that is causing China economy to collapse. And the most significant issue, undoubtedly, is the high deflation. Deflation has emerged as a critical challenge for the economy of China, affecting a wide range of areas, from the cost of groceries to fuel prices and more. So China's economy is collapsing because trade wars and sanctions have dampened global demand for Chinese goods, leading to weaker exports and excess production capacity. This surplus put downward pressure on prices as manufacturers compete for the remaining market share. Also, the war in Ukraine and ongoing geopolitical tensions have caused significant disruptions in the global energy market and dissuaded foreign companies from investing in China, hindering economic growth and demand. This undoubtedly worsened the deflation problem. This reduced demand led to price reductions, and it is bad news for China. With that, tensions with key trading partners like the US led to higher tariffs on Chinese imports, which in turn increased production costs and passed on to consumers in the form of higher prices. With that, China's economy is collapsing because the country is facing a significant housing market crisis. While the exact severity and future trajectory are debated, the situation is a major concern for both China and the global economy. Since 2021, home prices have been falling in many Chinese cities, with some areas experiencing double-digit declines. This is a sharp reversal from years of rapid appreciation, impacting developers, homeowners, and overall economic confidence. Many Chinese property developers, including the giant Evergrande Group, are heavily indebted. This debt burden, combined with tighter government regulations on borrowing, has led to defaults, stalled construction projects, and widespread financial uncertainty. Also, China has built a vast number of empty apartments, estimated at over 50 million units. This excess supply further weakens demand and puts downward pressure on prices. China's birth rate is declining, leading to a shrinking pool of potential home buyers, adding to the market's woes. Younger generations are facing a particularly tough time in the housing market. Housing prices have been outpacing wage growth for many years, making it difficult for young people to save up for a down payment. This is especially true in desirable locations, like major cities and coastal areas. Many young people graduate with a significant amount of student loan debt, which can make it difficult to qualify for a mortgage. Furthermore, China's economy is collapsing because the country's national debt has ballooned in recent years, becoming a major concern for both the country's own economic stability and the global financial system. While the exact situation is complex and the severity debated, understanding the key points is crucial. China's total debt, including government and private sector, is estimated to be around 235% of its GDP, one of the highest levels among major economies. The debt burden is divided between the public sector, 53.2% of GDP, mainly local governments, and the private sector, 181.9% of GDP, dominated by corporations and households. The high debt levels could weigh on China's economic growth, as resources are diverted towards servicing debts instead of productive investments. This could have ripple effects on global trade and economic activity. Defaults by heavily indebted companies or local governments could trigger wider financial instability, impacting banks and potentially leading to a crisis. And China is taking a multi-pronged approach to try and avoid a recession and to fix this situation. But it is no guaranteed way to avoid a recession. And the effectiveness of this response from the government will depend on a variety of factors, including the ongoing war in Ukraine, global economic conditions, and how the government manages interest rates. And that's it for today. Subscribe to our channel and hit the notification bell.